And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast, my fine, furry, feathered, and futures friends. It's time for the market forecast, Wednesday, January the 7th. Always hoping you find accurate context, good risk management, and patience in your trading. Today, December 7th, it is Pearl Harbor Remembrance Day. Say a prayer for all those that were lost on that day. And always reminds me that, the freedoms that we enjoy have a cost. So say a prayer for those lost on December the 7th. And let's get into the markets. As far as economic numbers are concerned, 7:30 productivity and costs came out, probably not all that impactful. Didn't really check out to see what they had to say. Where are we here? Wednesday. Labor costs were lower than expected, and farm productivity was higher than expected. Not really sure how to read that into the markets, but 9 o'clock today, the Bank of Canada is expected to raise their rates by about 50 basis points. Keep an eye on that. 9:30, the EIA Petroleum Status Report is due out. Consensus for it is a loss of 3.3 million barrels. However, the API consensus last night was 3.8 million barrel loss. It came out more than expected at minus 6.4 million barrels. You got to remember we had a pretty big drop last week as well, and I'm starting to wonder when that fundamental information is going to come into pricing for crude oil. We've got crude oil basically at the low of the year on the close last night, lowest close since 2021. U.S. stocks are set to open still lower today as the boogeyman of the specter of higher rates and recession continues and persists on the minds of traders. Speaking of persistence, I've got a big black dog here that wants me to pet him, so I'm going to pet her. Canada, again, expected to raise rates. U.S. investors are really focusing on anything that says higher rates or potential recession. We've got the big toe complex going on in the equities right now, and the boogeyman, who I can tell you is real, doesn't stay around for long. At least we hope not. So the potential recession, again, a lot of talking heads on the news and economists are suspecting that is part of the reason for crude's, again, lowest close in a year. Again, we're looking for the EIA, a 3.3 million barrel loss. Last week, there was a 12.6 million barrel draw. At some point, supply has to meet demand, and demand seems to be controlling price, at least for the moment. This morning, a little while ago, checking VIX, the dollar index, and the 10-year yield, the VIX is up about 3%, 22.83. Still not a big number, but it is indicating that there is a greater degree of fear in the markets. Of course, we all can see that by the risk off couple of days that we've seen. The market is seeking some sort of balance, hasn't found it yet. Dollar index down again this morning a little bit, just marginally at 105.20. It's got gold and the euro looking to the upside, or at least attempting an upside move. Yeah, the dollar is selling off. The 10-year yield is still remaining at right about 3.5, and I suspect that it's going to remain there until after the FOMC meeting, if not right there, relatively close to there. A lot of folks just waiting for that FOMC meeting next week to find out if it's going to be 50 basis points, suspected 75 basis points. Lots of speculation on that in the markets and in the news these days. As always, if you like what you see, make sure and hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome on the forecast recap and everything we do here. Subscribe to our YouTube channel. You get notified when we do go live. Good morning, everyone. It's good to see everyone. We do have Make Hogue Money today. It's the afternoon session at 2 o'clock. Looking forward to seeing you there. We're going to get a good look at what's happened throughout the day and see if we can find any late opportunities in the market. Good day yesterday in Make Hogue Money. We probably should have just held on to that short until the cows came home yesterday. But we did have a good morning, and that's good enough for me. Theo, good morning. First in the room, you win the prize. Scott saw and he conquered. Joel MB, good morning. Shog, happy hump day. Spencer, buttered coffee. I don't know if I've ever heard of buttered coffee. I've got my coffee right here in my happy little coffee cup. I don't know that I've had buttered coffee. I like just regular, rich, black coffee. Caprice 101, good morning. Bear goes long, good morning. Lacey, everybody says good morning. Oh, she's finally laying down, relaxing. Bear goes long. It's going to be one of these days. Time for the bear to go long. Not sure if it's going to be today. Nastic, good morning. Brody, Bill, Phillips, good morning. George, Duque, Patrick, Jules, Caesar, Terry, Stephen, good morning from Atlanta. Big election there yesterday. Sarah Hall, prayers and love to you as well. Glitter Sandwich. Jason, Dimitar, my brother Rick, good to see you, love you. Joel MB, it's sad nothing is made in America anymore. Just bought a new TV and it said built-in antenna. I don't even know where that is. Well, it's, Joel, you are a funny guy. I can tell you are a funny guy. Rooster, good morning. Vince, good morning. Marcelo, DA, George, good morning. Lacey, good morning again. Where are we? Dan Trader, Hagel Matters, good morning, Joe. Good morning, Rusty Golfer. Good morning, Keith Alba. Orion, good morning, Serenity Trader JM. Alejandro, Rob T, Charles March, and Nisa, Randall Naveen, good morning. Timothy Marks, buttered coffee tastes like it sounds. I've never even heard of anybody doing that. My wife drank hot buttered chocolate as a kid. I just thought she was weird. Good morning, traders. If you want rich coffee, have Colombian coffee. Rich Colombian coffee. Picked by Juan Valdez. Cinnamon and sugar and cream. Yum, yum. Jay, good morning. I've had a hot buttered rum before, but I've never had hot buttered coffee. May have to give it a try to see what it's like. Achilles, good morning. If you're new to the market forecast, welcome. We're glad you're here. Again, our hope is for your success. Our idea is just to kind of prep for the trading day, looking at some of the charts, thinking about some of the technicals and some of the underlying information that these markets provide for us to try and help us decide what opportunities we are looking for. So we will see what's going on. David Crossan, I think that's a new name. It's nice to see you, David. I drink it in the morning and I don't get hungry till mid-afternoon. Keeps me lean and healthy. That's something I could use. But usually butter isn't the thing. I'm a big fan of butter. Trust me. I don't use margarine. I use the real stuff. Good morning, Tomas. Tomas, it's good to see you. Another name I don't think that I've necessarily seen before. It is a pleasure to have you with us today. So we're going to jump into the charts here and take a look at what we see. We know that the equities have been on their heels, keeping buyers on their heels for the last couple of sessions. We've got some potential changes in market state, longer, medium time frame market state in the equities. We're going to go ahead and take a look right now. Let me get set up. We can see everything. All right, here is the daily in the S&Ps. Dowitzer, good to see you. David, good to see you. All right. So we've been talking about this trend line for quite some time. We broke out below it yesterday. We also closed below the weekly kickoff low. Now we are at serious risk of changing the medium time frame upside market state to either balance or a move to the downside. What are we looking for? What are we waiting for? We're waiting for the FOMC meeting on Wednesday. The market has exceeded my expectations to the downside here this week so far. My main hypothesis was we would probably just kind of range up here through the week and into the FOMC meeting. Unfortunately, we did have some positive kind of less impactful in economic information early in the week that brought the boogeyman to bear. So we are dealing with the recession and interest rate boogeyman again. Volume picked up a little bit on the push to the downside, the acceptance below this trend line and potential acceptance below weekly kickoff low. Overnight inventory still indicating liquidation. We lost 12,000 in open interest in this session yesterday. We didn't bring in new sellers. We got rid of old buyers. We're taking care of old business first. If we're going to continue this move to the downside, I'm going to look to see increasing volume and increasing open interest. Okay, when we think about the auction process, volume and participation are two of the biggest parts of it. Volume is what is the driver of the advertising mechanism price. Open interest indicates who was involved. Yesterday we had long liquidation. Only 12,000 lost in open interest, but it's an indication of who was in control yesterday. It was potentially not new longs. It was old shorts getting out. These things are they're somewhat blurry. They can be so helpful at times, and sometimes they're not going to mean all that much. What I'm looking for in an auction process is increasing volume, or at least maintaining volume, waffling volume, and an increase in open interest, which we have not yet seen in the S&Ps. Investors are still feeling that boogeyman. When we take a look at the overnight high, what did we trade to? We traded to 39.54. What's the weekly kickoff low? 39.54. A straight shot in the overnight session at a level that should have been support, but now is presenting as resistance. If we get the opportunity up there today, I think it's an interesting opportunity for an execution. Whether we re-accept above it or we continue to fail above it and continue to accept below it, it gives us the opportunity to limit risk. Spencer, we used to joke when my mom used to come down for the holidays or for Thanksgiving, we used to joke that we used a pound of butter a day because we were cooking so much and making so many treats. I just saw that comment. I had decided to say something about it, Spencer. So we're still feeling the boogeyman. We're still on the downside. We're possibly accepting and creating a new market state, either to balance down here or to a continuation of the downside. Look at this. Look at the amount of space that we have in this downside move. There is plenty of room for a downside move. We haven't even necessarily seen true new sellers come into the market in the S&Ps. If they come in, we could see continuation. Though the long liquidation is actually working to remove selling power from the marketplace. Think about it. Longs have to sell to liquidate those positions. They are initiative sellers. We are now at a position where we've probably gotten out of most of those weaker hands longs. Now we're looking for new business, longer time frame participation. These weekly kickoff levels are meant to kind of point out where I think longer time frame traders are going to adjust inventory. If they do adjust inventory to the short side, we could see continuation to the downside. If they don't, we may just kind of fall into range in this area because we are looking for the FOMC with lots of questions as to what's going to happen. Take a look at the 30-minute chart here. There's our overnight test to weekly kickoff high. We're holding overnight shorts. Those overnight shorts are already showing signs of capitulation. Okay, so overnight longs already reconciling. We're going to open in range and in value. I would have to say, main hypothesis as to what could happen today, we've already kind of mentioned. We're either going to, my main hypothesis, I think, is we're going to find a range. We're going to probably get into a hangover type situation today. Now, that's hypothesis number one. I've been wrong before. I'll be wrong again. Hypothesis number two is that we find more sellers, new selling comes in, and we continue to push this market to the downside. A test of up to weekly kickoff high could change things, and acceptance above it could push price higher. Okay, so hypothesis one, we find a range and stay in it. Hypothesis two, we find new business to the downside and we continue selling. Hypothesis number three, we get a chance at weekly kickoff high, which could be friendly to the upside or an opportunity to continue to push to the downside. Here's the TPO chart. So we've been really emotional on these moves to the downside. Now we have excess at the high here. We have now taken out the weak lows that Fred Decker pointed out to us from last week right here. What do these profiles look like? Well, we don't have a lot of single TPOs. We've got one little spot right there. This is a relatively organized and all time frames acting in concert move to the downside. Yes, it's a little toothy, but at least there's not a lot of anomalies here. We've got some overlap. We've got a little hole here. We've got a little hole here. All right. Let me do something here. He's being a little bit slow. So yesterday, a little less confident to the downside. Why? Well, we still have lots of excess at the high here. We did take out the weak low here. Fred was asking about that. With earlier in the week, what do you think of that? I said, well, it's going to be important when it's important, and it was important yesterday. The market basically traded right down to it, and then tried to continue to push lower. So, what are we looking at? Well, we have, whoa. Okay, anomaly. This kind of was already checked. The market is losing its confidence to the downside, at least for the time being. It doesn't mean that it can't continue the move to the downside. It's just one of the nuances and probably not one of the ruling reasons why I will take a trade today. We have a weak high in the overnight session, also a lack of downside confidence. Again, it does not mean that the market can't find sellers here and continue this move to the downside. It's just one of the many nuances that I use to make trading decisions. So we've now, I think, kind of come off just a little bit here, but we're still going to be opening in range and in value. Overnight inventory largely reconciled to a fair part. We started here, we are here, probably still a little bit short, but back in value. That's going to say to me, my first hypothesis is proving right. We're opening in range and in value. That's the first sign of potential range-bound activity. It may not play out. Of course, we don't know what's going to happen. Let's take a look at crude oil now. All right, so, okay, yesterday on higher volume, we only lost about 500 contracts in open interest. Is that friendly to the downside auction? Probably not. So, volume was pretty good, though. Volume, I'm kind of impressed with. We did not, according to open interest, pile in a whole bunch of new sellers. Probably means we're not getting too short. Yesterday, there was probably more of an evening of inventory than a new creation of inventory. Take a look at the 30. Last week's low, I think, is going to be somewhat pivotal. It's what was targeted on the downside move yesterday. Inside value, no real overnight inventory. My suggestion is always to stay patient because there's a higher probability of better trade locations occurring later in the session. We are out of balance in longer time frame, but in balance in the day time frame. Again, possible for better trade locations to occur as the day goes on. The market has just opened. It appears as though the opening range has been left at the high. Does that give us a good opportunity? Well, only if we want to risk 50 ticks. All right, hang on a second. So back to the 30, I'm going to suggest trying to stay patient, looking for better trade locations as the day goes on. And don't forget, we have the EIA Petroleum Status Report due out at 9:30 Central Time, so about an hour and a half from now. NASDAQ is in a little bit of a different situation. We still have the potential break of this upside structure, very mild upside structure, possibly acceptance outside of the current area of balance, and I'm kind of looking at the current area of balance as last week's low. We've been unable to accept below last week's low so far. We've broken out. We've accepted below the trend line. We've accepted below weekly kickoff low. We did add 3,200 in open interest yesterday, so we did attract some new business to the downside. That's a little bit healthier for the downside auction, or is it? Are we getting too short? Volume was good, similar to the S&Ps. It was a little bit higher than last week. I'm looking at last week's low again as a pivotal area. There is space below it. Looks like we are about possibly to open with a gap in the NASDAQ. Take a look at the 30-minute chart. All right, so no gap. Is there going to be a gap? We don't know. We open with a gap and reaccept inside value. That brings value area special situation into play, which could bring us right back up to value area high, which is essentially weekly kickoff low, which is 11,645. Very interesting. So if we do manage to open with a gap and we reaccept inside value from yesterday, the value area special situation play comes into play. What is the value area special situation play? Well, the market opens out of range and then comes back inside range and reaccepts inside value from the previous session. That's a rejection of lower pricing and an acceptance of current value. That would mean that there would be a relatively there would be a higher probability of price reaching the other extreme of balance at some point during that session. Acceptance is subjective. Sometimes you're going to see the market come in and leave, come in value and leave, come in value and leave, and then finally accept and then rotate back to the high of value. Sometimes the market will come back into value, accept immediately, and drive straight to the other side. It's never easy, and the markets never make things easy for us. All right, so watch and see if we open with a gap. If we can't hold the gap, see what happens after that. If we find acceptance inside value, that could be a pretty decent upside opportunity. And I know it seems strange to say that. We've been down for 2 days. Everybody is thinking down, but the market's not going to just go one direction constantly. I think this market could use a pullback. I don't know if it's going to happen, of course. But anything, as we say here on the market forecast, can. Anything can happen. All right. Gold. We got the dollar on its heels again a little bit. We lost 3,800 in open interest yesterday, but we never really did accept outside the current area of balance, this little box that we've put here. This little box has been put right on top of the previous box or area of balance. So, we lost 3,800 on yesterday, so volume in open interest fell near a relatively important level. The risk-off boogeyman in play here? Quite possibly. It's been, 2 years, or at least the whole last year, where people have been wondering, why isn't gold rallying on risk-off periods of time? Well, the dollar is off now. We are in a risk-off period of time. It seems there's a little bit of support being created at these lows of this excess. Again, it needs new business to continue lower. I think we maybe got a little bit short on this push to the lower end of this area of balance, and we may start this rally on the backs of some weaker hands shorts down here. I don't know if it's going to rally or if it's not. These are just thoughts. What is it? Hypotheses, right? So we opened kind of in range, kind of in value, really just not looking at too much early in the session here today. But I do have kind of a sense of a larger opportunity at some point here today. If we can get the dollar to move, I think that there is some sort of bigger opportunity kind of on the horizon here in gold. Take a look at the TPO chart. All right, excess, very even bell curve in the overnight, which leads me, one of the reasons that leads me to believe that we are getting closer to using up the market's ability to facilitate trade, and a move away from this area is likely. Take a look at the profile yesterday. B-shaped long liquidation supported by the loss in open interest. Toothy, not a very confident market to the downside there. The opening range was initially the high of the session. I think that's now been taken out, which gives us the opportunity to be patient and to wait for better trade locations as the day goes on. Here's the euro with the dollar coming off again. Euro looking strong again. What have we created here in this daily chart? The dollar sinks. Volume was low yesterday. We added 2,200 in open interest, maybe getting a short time frame, a little short here. Have we now created a bull flag? Bull flags are small ranges on lower and lower volume, contrary to the bigger picture. We saw one here. We saw one here. Now are we seeing one here? If that's the case, then we've already broken out the top of the bull flag, and we could be seeing continuation to the upside. Last week's high, currently showing some signs of rejection here. Hate it when I do that. All right, here's the 30. So here's what we're talking about in a bull flag. Price comes up, pulls back on lower volume, and now we've got the breakout above. This could be a decent continuation. Last week's high, I don't think I've put it on here on the 30-minute chart here. Last week's high, I think it was right up here. And I'm including the overnight session. Nope. Right there. So right at our current session high. Market opened with a gap, working on closing the gap. Again, value area special situation play does come into play. We've opened out of range if we reaccept inside value from yesterday. And again, acceptance is subjective. We could see this market pull all the way back to value low from yesterday, which would give us an opportunity near this trend line to look for another execution. The 10-year, backburnered. Well, at least for now, we're starting to see a little bit of activity here. We did have a late spike to the upside yesterday. So that's one nuance that is favoring continuation to the upside. We lost 20,000 in open interest yesterday. Volume has been atrocious. We're awaiting the FOMC meeting. Take a look at what's going on here. Here's our late spike. We'll see this on the TPO chart as well. This market has found some legs to the upside. We got a little bit of a downturn here in the 30-year note. Something I think maybe about Canada has changed things a little bit for us. What did they do? Well, it's not time yet. They haven't done anything yet. Almost seems like something has occurred. Something has happened. Here's the late spike. There's our late spike yesterday. Okay. We've opened, tested the start of the late spike largely, but now showing rejection of lower pricing, acceptance of higher pricing, up near the top of the current extreme or balance area here. This is interesting in the 10-year. I really had this backburnered, but this has changed things a bit. Take a look at the natural gas now. So we added 4,700 in open interest yesterday on lower volume. How is the auction process? We had a higher open interest, but volume dropped off, and that's either one of them can indicate a weakening of an auction. We've had open interest increase over $12,000 between yesterday and Tuesday. Maybe we're a little bit short here. If we are, those shorts are sweating. Again, lower volume yesterday. Here's the 30-minute chart. Overnight inventory to the long side. Opening, just missing the gap and driving back into price. So overnight inventory certainly likely to be playing a part in the early morning pullback here. If we can find some opportunities against some of these lower time frame levels to look for an execution, I would certainly be thinking about doing that. Didn't quite get to Monday's point of control. That's information that can be important. So value moving lower, volume lower, open interest higher. Just a pullback. Longer time frame sellers are now in regular time frame pushing the market lower, or is this overnight inventory? So my brother Rick is talking in the chat about the Bank of Canada set to rate hikes, but may signal it's near its ending of the tightening cycle. There are a couple of other countries that have said that they have reached the end of their tightening cycle as well. Let me see here if I can find this. I think it was Australia. Brazil and Poland, both which started tightening monetary policy earlier than the Federal Reserve, are expected to hold their key interest rates today, not raising interest rates. Poland and Brazil. Boy, lots of good comments here. I don't necessarily think we have time to be looking at all of this. Looking forward to the trading day today, as usual. Trading research, yes, very similar structure to Monday yesterday. Yes, the low again occurring in K period. Also one time frame lower until the last hour of trade, normal variation day. Nearly 100% range extension of the IB. Same 2 days, right? Recognizing that around K period there was a high odds play to the upside with well over an 80 tick available entering above the lows and holding to somewhere around the close. And Joe is talking about some of his options levels. Responsive trade higher to sell the target 3,900, where huge put positions can be supported as put buyers, I should say, sell puts and force retailers to buy futures to hedge and get flat on their position. Joe, thank you very much for that. We are going to have Anne-Marie Bain with us on Tuesday at 9:30 for a special Make Hogue Money. Make Hogue Money won't be at 8:20 on next Tuesday. It'll be at 9:30, and we're going to have a good conversation, hopefully, with Anne-Marie about some of the things that Joe is discussing. Joe has a way of seeing where there's large options positions and where they're going to need to hedge those options positions in the future. So you get some really good information on where some serious options liquidity will be in the futures market. So again, we're looking forward to that. I'm looking forward to a good, challenging, interesting trading day today. Make sure you manage your risk. This is all about trading for tomorrow. Anything else I got to tell you? I'm going to have to wait. Vince, weekly kickoff high and low for the S&P is the current overnight high is weekly kickoff low 39.54, above 41.38 is weekly kickoff high. I'm kind of hoping we get the opportunity to see price at that level today, but I think it's highly unlikely. Okay. Trading research, I was going to just mention, maybe we can get Joe to sit and chat with us about that stuff as well. We'll discuss that. Take your deep breath. Stay humble, grateful, and creative, and centered in your trading today. Looking forward to seeing everybody for the market recap. We do have Make Hogue Money at 2 p.m. Central. Market recap will be about 3:15 because of that, but looking forward to seeing everybody there. Have a great trading day. Get out there and profit. Trade well today. Don't forget to be kind to yourself, others. Say a prayer for peace, and bless you all. Have a great trading day.